Good morning friends, today is 25th of Feb 2025 and the technical outlook for Nifty and Bank Nifty for intraday and short-term time frame is as follows. Since last few sessions we have been saying that the index remains under pressure, trading below 23,250, 23,200 mark and with a decent important support at around 22,750, 800 mark. So yesterday we have seen that it has witnessed a gap down opening and tested the lows of 22,570 before ending the session in red, down 0.92%. at 22,612 levels. So the bias remains range to down and the earlier resistance of 23,250 has drifted down to 23,000 mark. So unless and until it sustains above 23,000 mark, the bias remains range to down, and this is an extension leg of correction because the index is approaching towards the oversold zone. So unless and until we see index holding over and above 23,000 mark, the short covering and fresh buying interest is not expected. While on the lower end, 22,000 and lower are the important support levels. Since it's an extension leg, dips is expected to witness equal strength pullback in days to come. For the day today, trading zone can be 22,500, 22,800 mark with a buy on dip intraday outlook at 22,510 futures and 22,420, keeping a stop of 50 odd points, while pullback towards 22,800, 22,940 will be looked as a resistance and selling opportunities, maintaining stop of 50 odd points. As per the monthly OI data for 27th of Feb expiry, the maximum call buildup is at around 22,800 call and the maximum put buildup is at around 22,500 as per the option chain study. So the bias remains range to down with the important level at around 22,500, which need to be held for a couple of sessions in order to witness any kind of change of the trend, which is currently range to down. Bank Nifty to witness a gap down opening. It tested intraday lows of 48,305 futures and ended the session at 48,794, down 0.48%. From the lows, it has witnessed some kind of recovery, but the derivatives change and open data indicates that there are heavy option sellers active at a high strike price. So immediate resistance remains at around 50,000 mark, below which the bias will remain range to down with the important support at around 48,000, 47,500 zone. Couple of important observations is that US bond yields have slipped down almost 4.5% in last 1 month from the highs. Bitcoins, crypto is down almost 6.6%, while our index is also down 0.5% from the highs of 5th of Feb 23,853 levels to yesterday lows of 22,572. So we can see some kind of traction where positive signals are coming from the broader cross asset segments, and we are expecting that there can be some kind of buying interest at lows of 22,000 and odd. In last couple of sessions we have seen some buying interest in mid cap and small cap. So there is a clear signal that proportionate buying and fresh accumulations in small and mid cap has been started by the biggies, and we technically recommend that quality counters can be looked for proportionate buying for next 6 to 12 months time frame in mid cap and small cap segment. While the heavyweight still remains range to down, the reversal signals are awaited. Until we doesn't get a reversal confirmations on charts, the bias remains range to down. So avoid leverage positions, but yes, selective buying in small and mid cap segment can be looked for next 6 to 12 months time frame. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.